Bitcoin hitting $1 million isn't just a fantasy, it's a possibility of gaining traction. In this video, we'll uncover the key factors fueling Bitcoin's potential rise, from scarcity and institutional interest to technological advancements. Are you ready to discover why now could be the perfect time to invest? Let's dive in. Chapter 1. The Scarcity Factor. Alright, first up, let's talk about scarcity. This is a big deal when it comes to Bitcoin. Bitcoin has a capped supply of only 21 million coins. Right now, over 19 million Bitcoins have already been mined. That means we're getting close to the finish line. When demand goes up and supply stays the same, what happens? You guessed it, prices go up. This is basic economics, folks. And with inflation being a hot topic, more people are looking at Bitcoin as a hedge against inflation, like digital gold. Plus, every 4 years we have a halving event where the reward for mining Bitcoin gets cut in half. The next one is coming up in 2024, and historically, these events have led to massive price surges. Just look at what happened after the last halving in May 2020. Bitcoin skyrocketed from around $9,000 to over $60,000 within a year. Chapter 2. Institutional interest. Next up is institutional interest. Over the past few years, we've seen a major shift in how big corporations view Bitcoin. Companies like MicroStrategy have gone all in with their investments, over 100,000 Bitcoins purchased. And let's not forget about Tesla. They've also made significant investments in Bitcoin. What does this mean for us? Well, when big players enter the market, it brings credibility and stability that can attract even more retail investors. According to recent surveys, about 65% of institutional investors are planning to invest in digital assets like Bitcoin soon. And guess what? The launch of Bitcoin exchange-traded funds has made it easier for traditional investors to get involved without having to buy Bitcoin directly. This opens the floodgates for more capital flowing into the market. Just look at the BlackRock. They launched their iShares Bitcoin Trust and attracted billions almost overnight. Chapter 3. Technological advancements. Now let's dive into technology, an area where Bitcoin is constantly evolving. One major innovation is the Lightning Network, which is all about making Bitcoin transactions faster and cheaper. So here's how it works. The Lightning Network allows users to create off-chain transactions that can be settled later on the main blockchain. This means lower fees and quicker processing times, perfect for everyday transactions. As more people start using Bitcoin for regular purchases instead of just as an investment vehicle, demand, and you guessed it, prices could take off. Plus, improvements in wallet security and user interfaces are making it easier than ever for newcomers to jump into the crypto space. And let's not forget about ongoing advancements in blockchain technology itself. Developers are continuously enhancing functionality and security features that will boost user confidence and drive adoption. Chapter 4. Macroeconomic influences. Now let's talk about macroeconomic influences. This one's also important. With inflation rates hitting record highs globally due to various economic challenges, like those caused by COVID-19, people are looking for alternatives to traditional currencies. As more individuals see Bitcoin as a hedge against inflation, we could witness an influx of new investors pushing prices higher. Many analysts are now referring to Bitcoin as digital gold because it offers a store of value that can withstand economic turmoil. And during times of economic uncertainty or geopolitical tensions, assets like gold and Bitcoin often see increased interest as safe havens. Historical data shows that when markets become volatile or uncertain, investors tend to flock toward assets perceived as stable or resilient. Chapter 5. Public perception and media influence. Alright, let's get into public perception and media influence. This one's interesting. The way people perceive Bitcoin can greatly impact its price. Positive media coverage can spark interest among potential investors who might have been skeptical before. When do celebrities or influential figures endorse Bitcoin or share their success stories? You often see increased buying pressure from retail investors eager to board. The cryptocurrency community also plays a vital role here. Grassroots engagement through forums and social media fosters a culture of investment that helps drive prices up. As awareness increases and more people understand the benefits of Bitcoin, like decentralization and limited supply, we may see even greater demand. Chapter 6. Regulatory Landscape. Another crucial factor influencing Bitcoin's future price is the regulatory landscape surrounding cryptocurrencies. Governments worldwide are starting to pay attention and are working on frameworks for regulation. Now, while some regulations might seem restrictive at first glance, like those aimed at preventing fraud or protecting consumers, they can also provide legitimacy and stability within the market. Clear regulations can help reduce volatility by establishing guidelines for how cryptocurrencies should be treated legally. For example, countries like El Salvador have adopted Bitcoin as a legal tender. This could pave the way for broader acceptance globally. As more nations recognize the potential benefits of cryptocurrencies like increased financial inclusion, we may see an uptick in adoption rates that could push prices higher. Chapter 7. Long-term outlook and strategies for investors. So where does all this leave us? While predicting that Bitcoin will hit $1 million may seem far-fetched today, various factors support this bold claim, from scarcity and institutional adoption to technological advancements and macroeconomic influences. For investors looking at this potential future price point as we approach December 2024, it's essential to develop sound strategies based on thorough research and risk assessment. When considering investment strategies, here are some essential tips. First, diversification is key. Don't put all your eggs in one basket. Spread your investments across different asset classes. Second, stay informed about cryptocurrency regulations, technological advancements, and market trends. Third, maintain a long-term perspective as cryptocurrency markets can be volatile. This helps you weather short-term fluctuations. Lastly, consider dollar-cost averaging by investing fixed amounts regularly instead of trying to time the market perfectly. If you find this video informative or thought-provoking today, give us a thumbs up. And don't forget to subscribe. Thank you for watching. We'd love your thoughts. Do you think Bitcoin will reach $1 million? Share your opinions in the comments below.